All right, good morning. We made it half an hour away from the opening bell. Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Yvonne.
Our top stories this morning. Asian stocks making a positive start to a week set to be dominated by data, including the Fed's preferred inflation gauge. We're going to get China's April industrial profits in just about half an hour's time.
Also ahead, G7 finance chiefs blasting Beijing's trade practices, threatening tougher protections for their economies and also critical industries.
And China urging South Korea to maintain stable supply chains as they prepare for their first Trilateral summit with Japan in 5 years. Well, happy Monday for you, and we are seeing a positive start to this trading week, of course, after we suffered probably one of the worst weeks for equity markets here in the region in more than a month. So at least we're seeing a little bit of a boost in sentiment here this morning. What's driving that? Well, on Friday, there really was that U.S. inflation expectations coming down a bit, so maybe that tempered those concerns about higher for longer. But certainly keep in mind, though, no cash treasuries trading here today with U.S. markets are shut for the Memorial Day holiday. So we're seeing bond futures are slightly up here this morning. Bond yields in Australia heading slightly lower, still watching that 1% level for that JGB 10-year yield here. We're expecting the governor, Ueda, to be speaking in Tokyo. Maybe we'll see anything, right? Market's still pricing in a possible rate hike this year from the BOJ, and we're still seeing a 156 sort of territory, $4 yen, although seeing some strength come back into the Japanese currency. And we're seeing U.S. futures are pretty flat here this morning. Obviously, not a whole lot of volumes there, given that we are in a holiday in the U.S. Brent crude up around $82 here. There's not a whole lot of news in particular here, but the week ahead could be pretty interesting. We talk about the Fed's inflation gauge. We have China PMIs to wrap up the week as well. Golden Dragon did this on Friday, and certainly we're watching very closely after that 4-day skid when it comes to Hong Kong stocks. This consolidation, whether, how long could we see things, or are there signs of maybe this rally reigniting once again? Certainly we're watching very closely. Didn't do too much on Friday. Futures are doing this when it comes to China, slightly to the upside here, about a third of 1%, 231 for your Chinese 10-year yield. The currency, a little bit of strength here, but we're being modest, 725, just barely at 726 level, Dave.
Yeah, there we go. Going into really, and as Yvonne is pointing out, it's extremely quiet on the news front. Who knows what the next few hours gives us in terms of the news gods and them raining, perhaps something for us to talk about. All that being said, it's busy, at least when you look at the agenda, at least. We'll get to the week in just a moment here. So, Trilateral Summit that started on Sunday. There's a press briefing scheduled, I think, in about 90 or so minutes from now. So stay tuned for that. More lines coming through. As far as that's concerned, data points this week, or data points today, let's start with that. Industrial profits, bottom of this hour, top of the, well, towards the close of the session, trade numbers coming out of Hong Kong. We'll talk about falling turnover in a moment. I think we hit 760 billion on Friday. That's onshore, that's renminbi, so that virtually was the lowest since the rally began. And, of course, in terms of earnings, CSBC Pharma today, and I think tomorrow's Alibaba Health. Right. As far as the agenda this week is concerned, and by the way, I didn't get to this, there's an amber rainstorm warning up over Hong Kong today, so just get those cheap shoes out. There we go. Oh, it's canceled already. I've been told it was canceled. Okay. So
that was quick.
If you're in your cheap shoes, then keep them on. Okay. Data points this week. U.S. GDP numbers coming on Thursday. The PCE numbers as well. As Yvonne is pointing out, of course, in terms of China, you have the PMI numbers set to come out, I think, on also
Friday.
Towards the end of this week. There we go.
Yes, so let's talk about really what's been going on. We have some time maybe to digest where we are in this rally after these 30% gains in China. We talked about, the week that last week was seeing a little bit of consolidation. Goldman Sachs, though, coming up with a note recently here and raising its 12-month target when it comes to MSCI China to 70, previously was 60. Also sees the CSI 300 reaching 4,100 now. That's up from its previous target of 3,900. Let's bring in Goldman's chief China equity strategist, Kindra Lau, behind that report. So why do we think this rally is sustainable?
Well, I would say, Yvonne, first of all, if you take a step back, I think what we have experienced over the past, call it 2 months, has been a typical or classic tail risk compression trade, right? Essentially, investors pricing out the left tail risks embedded in equity valuations on the back of pretty meaningful and forceful policy response, right? That's why we've been saying that the policy put option has been in place right? And against that backdrop, I think if you look ahead, given where we are in equity valuations, even after the recovery, we are trading at 10 times PE. And on top of that, from an earnings standpoint, we think that Chinese corporates could deliver about 8% earnings growth for this year. So if, say, the momentum in terms of policy and fundamental delivery could sustain, then we think that there's more gains to be made in Chinese equities. But obviously, it's come down to really policy delivery, and that's why in our client meetings very recently, I think a lot of investors are saying that the upcoming third-party plenum, as well as the July Politburo meeting, will be the key to watch.
So in the meantime, though, can we expect this to be, and I think Morgan Stanley, some of your contemporaries, they just put out a note this morning thinking that we will be range-bound for a bit, simply because when you look at the calendar, we're done with the earnings season, next earnings season 3 months from now, the Politburo meeting, you have July, of course. There doesn't seem to be anything over the next few weeks that might catalyze this market even further. So I'm wondering, what can we latch on to these next few weeks or so?
Well, I think it's reasonable to see market taking some time to digest gains and all the news flows that we have received over the past month or so. But again, I think in terms of the key events to watch for, the upcoming third plenum, as well as the July Politburo meeting, will be important, as we'll likely get more policy visibility, transparency in details, right, when it comes to policy execution. So maybe in the short term we'll see some range bounding market, but I think looking ahead, if delivery of policy is in motion and earnings remain solid, then we think there are more gains.
You mentioned about earnings, because it really will shift into rather multiple expansion to earnings revisions now. I mean, have they been able to deliver, given just the season that we've seen so far, to continue to drive returns, you think?
Yeah, I think if you look at the aggregate market, I think we're still in a downward earnings revision cycle. And for reference, we are looking for 8% growth, as I mentioned, but consensus, sell-side consensus remains quite optimistic, looking at about 12-13%. So we're still a little bit below consensus. But when we talk to investors globally, I think the so-called buy-side consensus is a little bit more moderate. So roughly speaking, mid to high single-digit type of earnings growth expectation. So the point is, I think for now, I think the revision trend continues to be downward sloping. But I think the bright spot, I would say, is that tech earnings, TMT earnings, as well as earnings for consumer-related sectors, particularly in the service economy, are seeing some upward revisions momentum.
Right, and I just see from the targets here that you're more constructive on the Asia market than you are slightly, comparatively, of course, to Hong Kong. Although the FOMO trade seems to be the big tech. You mentioned TMT, for example. Just if you could square that for us. International investors, the first thing to think about, big China tech. A shares is where you guys are looking to play. Yeah.
So I would say 2 months ago, we were arguing for H to outperform A. But after the very meaningful outperformance of H versus A over the past 6 weeks, I think the relative performance profile between the two markets is a little bit more balanced now. And the reason why we maintain our more strategically positive view on the Asian market is more due to the fact that I think from a policy angle, the so-called 9 measures we think will offer some upside optionality to equity investors, particularly from a dividend returns as well as buybacks perspective.
So you propose this strategy now, a 40-stock China recovery portfolio. It includes the dividend side of things. Yep. What else is in that portfolio now?
Well, it's basically 40 names that we like. Goldman likes. We have buy-rated for all the 40 names. And they encapsulate some of the themes that we like from a top-down perspective when it comes to Chinese equity markets, including the shareholder returns story that you just talked about, high dividend yields, stable dividend yields. On top of that, I think some of the names in the portfolio, they are turning more aggressive in repurchasing shares, right, buying back shares. Now, also from a more thematic standpoint, I think maybe I'll say 2 things. One is going global. This continues to be a story that we like. And then so internally, I think mass market consumption is still the way to go.
Okay. The U.S.-China risks, that goes into the going global theme somewhat, of course, when you think about tariffs, although arguably not too much, of course, what was announced so far. How do you model risks right now as far as geopolitical is concerned?
Well, maybe just a little bit of self-promotion. We have
Go ahead. Yeah.
we've constructed what we call as U.S.-China barometers, relations barometers. It's up on Bloomberg, by the way. The ticker is GSSR, USCN.
Okay. Producers, you got that, yeah? Maybe we can fire that now. Okay.
We'll fire the ticker.
And that barometer essentially helps us quantify to what extent U.S.-China risks or tensions are priced in the equity market. Now, if you look at the latest barometer, it suggests that we are sort of in the neutral, mid-cycle levels from a historical standpoint, meaning that I don't think equity investors are too concerned about U.S.-China tensions at the moment. But obviously, as we go into the U.S. presidential election cycle, we might hear more noises and more narrative about going against China. So I think, David, you're absolutely right. I think from a U.S.-China standpoint, I think this could be a key avenue for volatility to manifest for Chinese assets.
What about, you also have a property risk barometer. Maybe tell us a bit more about what that's telling you, because it seems like now you're less cautious when it comes to the property sector stocks as well as banks right now.
It's also based on market pricing.
Okay.
So essentially it's a composite indicator which includes property developers' NAV discounts, the high yield spreads in the offshore market when it comes to property high yields, as well as cement, steel price index. So we basically put everything together and try to come up with a comprehensive market pricing risk barometer for the housing market. So what it essentially tells us is that a few months ago, we were at the peak level in terms of concerns and risks embedded in the housing market pricing, but now it's come down, obviously, because of the policy reaction or policy announcements that we have been getting. But from a historical standpoint, we are still one standard deviation above historical averages, meaning that if more policy regarding housing market comes through, we think that there's more room for the risk to moderate from here.
Yeah, it seems that, I think, just to summarize, I guess, what we talked, it seems that we've come from such an extreme place, whether that's policy puts, for example, property. So I want to get a sense of positioning right now, so because that's also come from a very extreme situation. How much less underweight right now you think are global funds? Positioning
remains quite light. So we track two sets of data, hedge funds and mutual funds. Now, for mutual funds, even after the recovery, they're still allocating only 5.5% of the assets in Chinese equities. We're talking about $1 trillion of AUM globally. And for hedge funds, based on our internal database, I think hedge fund investors currently have about 7.5% of their net risk exposures to Chinese equities across A, H, and ADR. And this is still about 15th percentile over the past 5-year look-back period. So a lot of investors ask us a question about how do we compare now versus the reopening period.
Is this time different? Yeah.
I think very different from a positioning standpoint. At the peak of the cycle in early 2023, hedge fund investors allocate about 14% of their risks to China. So right now it's 7.5%.
Okay.
So almost half from where we were 12 months ago.
What are we missing? What's still missing for maybe those long-only funds to really re-rate the way that, you know, you're almost suggesting now that maybe things are going to continue to see upside from here? What are they still lacking or here in this rally?
I think short-term, definitely, investors are very focused on policy delivery, as I mentioned.
Yeah.
So again, the upcoming two events will be important. But I think for mutual funds running global mandates, I think they're still hesitant to come back. I think a lot of investors are saying that they want to wait until after the U.S. presidential election to get a clearer picture in terms of U.S.-China relations going forward before they think about re-engaging Chinese equities.
Okay, so we have a couple of months left. That's still in November. Kinger, fantastic having you, of course. Have a great week ahead. Hi to your team. Kinger Lau there, Chief China Equity Strategist at Goldman Sachs. Cutting down to the open of trade in Shanghai, Shenzhen, and here in Hong Kong, just over 15 minutes away. Futures bottom of your screens. Good morning. This is the China Show.
Your fix coming through this morning, and it is slightly on the stronger side, I guess you could say, 710.91. So we're off the 711 handles that we saw in the last few sessions, just given that emerging dollar strength. The dollar a little bit softer here this morning, so the PBOC reflecting that just today.
Yeah, there we go. So we're trading. Even the yen is also catching dollar yen's catching a slight offer right now on the back of the stronger midpoint out of the PBOC. I guess more on the geopolitical side of the equation, and speaking of China and Japan, let's toss in South Korea as well. So a rare trilateral leaders meeting today in Seoul amid, of course, a host of geopolitical and trade challenges. To get us up to speed on where we are here, Stephen Engel, our Chief North Asia correspondent, is with us here to talk about the significance of this trilat.
Well, obviously, it is very significant. They have not met the leaders of the three countries since 2019, pre-pandemic. So you have Li Qiang, the premier of China, you have President Yoon of South Korea, and Prime Minister Kishida of Japan, and it has already begun in Seoul within the last hour. There's lots to discuss, obviously, at a time, when South Korea and Japan have, I guess you could safely say that they've become a little bit more aligned with the United States on some of these export control issues and just supply chain issues that the United States has raised. Yes, Japan has signed on board the first kind of round of export controls, but they've been pushing back a little bit, saying, maybe we won't go further. And the United States has been pushing Japan and also South Korea to go further. But keep in mind, so much of their trade and manufacturing, the Japanese have in China, and the South Koreans sell a lot of their chips, obviously, to China. So, again, this is an opportunity for them to have a dialogue without necessarily that pressure from the United States at the table, right? But it is at the backdrop. And obviously, this is a great opportunity for China to improve relations to two of its most strategic neighbors in this world, in this part of the world. And not surprisingly, Li Qiang not only meeting and having dinner last night with his two counterparts from South Korea and Japan, but also meeting business leaders. And there will be a business meeting after this Trilateral Leaders Summit in Seoul. But Li Qiang got a jump on that by meeting with Samsung's head, J.Y. Lee. That's important. China would always remain open, according to the readout of what Li Qiang said to J.Y. Lee. China would always remain open to foreign enterprises and pledge to improve the business environment. So we'll have to see what comes of this. I mean, I think it's going to be mostly economic and trade issues. Geopolitical issues are just so far out there to resolve in a trilateral with North Korea and the like. And Kishida's talks with Lee were said to be a lot more pointed already in the bilat and at the dinner that they had yesterday. Essentially, he called on China to free detained Japanese nationals in China. He raised concerns about China's actions in the East China Sea. And again, assistance in trying to calm the tensions on the Korean Peninsula. And
this coming with a backdrop of what we heard in the G7, which was this rebuke on China and a sign of unity amongst the G7. What stood out to you?
Yeah, that's an interesting one, too, because we went into the G7 meeting in Italy expecting most of the dialogue to be around trying to engineer some aid from the proceeds or the returns on the seized Russian assets and money from the sanctions because of the war in Ukraine to be able to be used to help fund Ukraine's defenses. Now, there has been progress made on that front, according to the ministers, and they will probably push that forward to the leaders' meeting of the G7 in July in southern Italy. But the fact that the issue with China came so to the fore, and also with pointed comments, unified comments, singling out China is probably the most assertive comments from the G7 on a single nation like China and its trade practices ever. And here's the statement. It's basically, while reaffirming our interest in a balanced and reciprocal collaboration, that's the first part of the argument. There's also a but to this. We express concerns about China's comprehensive use of non-market policies and practices that undermines our workers, industries, and economic resilience. We will continue to monitor the potential impact of overcapacity and will consider taking steps to ensure a level playing field. And that is what's interesting. Would the G7 work in a unified way to have joint measures to counter the effects of overcapacity?
Yep, and Biden also reimposing some of those tariffs over the weekend, too, which we'll get into in a bit. Our chief North Asia correspondent, Stephen Ingles, joining us there. Still ahead, we'll take a closer look at China's economic recovery ahead of these industrial profit numbers out in just a few minutes' time. PMI is also later on this week. We have TidalWave Solutions partner Cameron Johnson joining us for more.
Yep, and going into the opening today, so Monday morning, so effectively there's very little volume risk appetite out there. Keep in mind, of course, the U.S. is on a long weekends, and just 7 minutes away, give or take, we're looking at a flat open here in Hong Kong, coming off a 4-day skid. Dollar yen bottom of your screens, the yen catching a slightly moderate bid going into this Monday. Might be liquidity, might be something else. Plenty more ahead. This is Bloomberg. Right, welcome back. Good morning. And going into the open today, if you didn't really catch a lot of good sleep on the weekend, just look at markets. There we go. That's going to put you back into your slumber today. Nothing much to tell you about. We're looking at a flat open. Price action is sideways. It could also be Memorial Weekend, of course, in the U.S., so we don't have cash treasuries trading today. In terms of the currency conversation here, dollar China, as you can see here, a slightly stronger fix coming out of the PBOC. In a couple of minutes, the industrial profits numbers for April will be coming out as well, so we'll stay tuned for that. And, of course, it's PMI week as well in China. Right, on Friday, in case you missed that, rightmost side is the turnover for the day. So we clocked in a sub 800 billion renminbi day on Friday, so that takes us effectively near the lowest since the rally began. Is it a sign of participation and interest starting to slack off given the consolidation we're seeing? Maybe. But of course, a lot of the commentary coming through recently, Morgan Stanley put out this note this morning.
That it seems like, we've already seen these, the good news on multiple fronts, whether it's the policy pivots, the macro data is turning a little bit more positive. Is that all factored in to asset prices already? They believe so. That's why maybe we will see some range-bound trading in the coming days or months or so. Kendra Lau thinks a little bit differently in Goldman, saying, look, there's still upside to this rally because the positioning is still
massively in light.
And also just it's a little bit different from what they saw during the reopening sort of rally surge. But yeah, they're starting to see long-only funds less bearish. You take a look at when it comes to analyst actions here today. So Long Yuan Power, that one's from Morgan Stanley, upgrading it to overweight. The company expected to benefit from a potential improvement in utilization hour and capacity expansion, according to analysts there. Costco shipping A shares raised to equal weight also at the firm. And Hangzhou Hikvision reinstated buy as Suzhou Securities.
Yeah, the open just over 3 minutes away. There's also an update, by the way, out of SIFI Holdings. More on that in a moment. This is Bloomberg.
Welcome back. You're watching the China Show. We're counting down the open of markets here, and we're just a couple seconds away from those industrial profit numbers crossing your screens here. Likely to see a bit of maybe improvement according to Bloomberg Economics. We'll bring you those numbers in just a bit. But overall, you take a look at how markets are doing. It's pretty quiet on this Monday morning, just like the weather is. It's calmed down a little bit. But yeah, still trying to figure out where we are in this rally. Does it still have legs, or are we going to see this sort of range-bound trading as Morgan Stanley suggests, Dave?
Yeah, the next 3 months, they think everything that we know so far is in the price. And certainly when you look at the calendar over the next, couple of weeks or so. So we're done with earnings season. Who knows, of course, that there's really nothing on the calendar to suggest that policymakers can't come out with something. But certainly what we know so far is earnings season, that's 3 months away. The next one, the third plenum, that's in July. So maybe, just maybe, we could see range-bound trade. On that Morgan Stanley note, of course, bottom of your screen's 0.5%. They think things will be range-bound for about 3 months or so. 0.25% to the upside right now. You had a big dip Thursday and also on Friday in the Asia market, perhaps where we're seeing some sort of a bounce right now. There's some key levels to watch on the CSI 300, and I'll get you those levels in just a moment here. A glance at some of the big movers as well. Flip the page, please, if we can. Hong Kong, 4-day skid going into this Monday. And we're looking at a Hang Seng Index seeing 1%, so slightly more, in fact, in terms of price picking up. This could be just a function of the first few minutes. We'll see, right? Bottom of your screens, some of the big ones coming out as well as some of the heavyweights across these markets. So a couple of movers to watch at this point. Not a lot, in fact. It's very quiet in the news flow. SIFI Holdings, about 90 minutes back, statement to the exchange, an update on their liquidity situation. They say things are improving. They have a lot more options on the table, this whitelist. Perhaps yuan-denominated loans are part of that as well. They do expect their cost of capital to come down ever so slightly, 6% in the order going. CSBC Pharma is out with earnings today. Alibaba Health is coming out tomorrow. And J&T Global Express, we're doing 4%. FTSE Russell came out with an update on their global equity benchmark, and has now included J&T Global Express, of course, in that benchmark. Okay, as promised, a couple of levels to watch. CSI 300. 3,600 is the more immediate one because we bounced off that on Friday. We're opening right here. So that's an excellent watch. If we break below that, it's your 50-day moving average, which, as you can see, since the rally began, has in fact held. So we'll see or not. And in fact, on that note, 8 points to the upside. We are, Yvonne, bouncing off that level, that first level, to be more specific, of 3,600 over the near term.
And that's probably why Kendra Lau said, right, focus on that A-share market right now, because there is some signs of maybe potential catch-up after the rally that we saw here in Hong Kong. You take a look at those industrial profit numbers just crossing here, and it looks like after what was a pretty slow quarter, I guess you could say, things into April are probably about the same at 4.3%. So it's pretty similar to what we saw in the first 3 months of the year in terms of year-on-year numbers. The previously was year-to-date. So we're talking about 4% now in terms of industrial profits year-on-year. So at least there's the signs of improvement on those numbers here. Maybe there's a bit of a low base effect. Maybe we're seeing signs of a production also getting increased as well. And obviously those price declines that we're seeing when it comes to PPI prices, that's tempered a little bit. So maybe that's helped the number a bit too. Yeah,
we'll see if it continues, of course. And we get an update of that. I think it's in next week or the week after that, those inflation numbers. And by the way, in the next hour of the show here, we'll have a deeper dive into, is China in a balance sheet recession and what can they do about it if that is the case. Anyway, back to the here and now. So President Biden on the weekend, we talked about this earlier, is reimposing tariffs on hundreds of goods from China as part of a broader plan to protect American manufacturing. The U.S. Trade Rep office says it is allowing these exclusions to expire on goods like things like circuit boards, motorcycles. You have duffel and messenger bags. To be more specific, if you had to pick, I guess, between what your preference would be. That's a funny thing. Okay, now the move comes after the White House said it would quadruple tariffs on electric vehicles imported from China. It's also raising levies on imports, including for semiconductors, batteries, solar cells, and critical minerals due to the nation's alleged intellectual property theft.
Joining us now is a lot. Joining us now is Cameron Johnson to help us unpack all this. Senior partner at consulting firm TidalWave Solutions. Our Chief North Asia correspondent, Ingles, is also here as well. Cameron, it's great to see you here in Hong Kong.
Thanks for having me in, guys. Finally, after years.
You've dealt with and you talk to all these manufacturers in China all the time. I mean, how are they looking at these tariffs right now from the U.S.?
Honestly, they're looking at it as more, this is a U.S. problem, not a China problem. When you actually look at the breakdown of the tariffs, there really are no EVs in the U.S., so it doesn't matter. Battery parts, or battery components, they are coming in, but again, it's slow. So is it really affecting the industry? No. PPE, for example, very small on the margin. So when you actually look at the overall hit to U.S. imports of Chinese goods, it's about $18 billion, give or take, and which is really only about 3 or 4% overall.
What do you suspect any potential response would be from the Chinese side? If, in fact, China sees this as a U.S. problem, then maybe they don't need to respond.
Yeah, I mean, it's a good question. There's a lot of expectation that the Chinese won't respond in force, but they may try to make a point. So, for example, there could be further restrictions on materials for batteries, germanium, that kind of thing. Secondly, though, U.S. exports of auto to China in 2023 was $6.2 billion. So you could see the Chinese retaliate and say, we're already at overcapacity with EVs or other cars. Let's just go ahead and not have these high-end automotive, which again would hit back and make a point, at least to the U.S.
Hey, Cam, you mentioned about the tariffs up to 100% on EVs, and there was sort of a moot point at this point in the evolution of EVs because the United States doesn't really import Chinese EVs at this point, and 100% tariffs doesn't help that matter. But on PPE, for one, you have some there with you, just as sort of a bit of a prop, the masks and the and some of the surgical gloves, as well as syringes, is part of this. But you are also arguing that, is this more symbolic? Because the Chinese have such scale in these areas, their price, okay, 25% tariff, even 50% tariff, is still cheaper than the raw material costs and the input costs of an American factory building the same thing. So it's not going to impact them at all, really.
That's right. I mean, when you look at masks into the U.S., imports, or Chinese imports of masks, are 68% of the overall total. So if you look at this mask here, this is a 3M mask. We all remember these, the N95s during the pandemic. You can buy a 2-pack of these at Walmart for $3.60. In China, a production of a similar mask is anywhere between 30 to 40 cents. So when you look at 25% tariffs are now added, okay, now it's 38 cents, 50 cents. Is that going to impact overall? Are companies going to move supply chains? The answer is no. What's going to happen is, to keep that margin likely, and because of inflation in the U.S., retailers will just simply raise their prices. And if they have to eat a small margin, then they will. But again, to your point, the scale, when you look at syringes, medical syringes, every day in the United States, there's 10 million medical syringes used. Okay. In China, to produce a real at-scale medical syringe is anywhere between 2 to 3 cents. Okay, you put a 50% tariff on it. Great. Well, again, now it's 3 cents or whatever, 4 cents, whatever. It doesn't matter at scale because, again, when you buy those in bulk, it's cheap. Those on sale in the U.S. range anywhere between 15 cents on up. So, again, is a manufacturer going to take that in China? No. What they're going to say to the U.S. buyer is, this is your problem. Maybe we'll cut you a deal down the line to kind of even things out, but we're not going to deal with this.
So you're saying this is really just going to hurt the U.S., that these tariffs are going to backfire and maybe be inflationary, too?
To some degree, but again, it's only $18 billion, which is 4%. So are there really EVs in Chinese EVs in the U.S.? No. PPE, maybe companies will start purchasing it from other places. We've seen that with these nice fancy gloves. So the same thing, you can buy this. These are about 7 to 10 cents each. Here in China, they're produced for about a penny, but only about 10 to 15% of gloves go from China into the U.S. It's actually more from Malaysia. So again, are you making an impact? Can there be some substitution? Perhaps, but overall, this is very much symbolic, and it's not going to affect the overall supply chain.
I'll borrow those gloves. I have a Michael Jackson costume party to go to this weekend, just as a cheaper option. Banter aside, Cameron, talk to us about what you're seeing as far as the economy is concerned.
Yeah, I mean, there's a lack of confidence overall, both in the private sector and consumers. So we've seen kind of the traditional wealth creation engines, rising real estate prices, changing your job, salary increases. Those have slowed down. There's an unclear roadmap for growth, right? We knew, for example, if you were Starbucks, one of the interesting things being in Shanghai is that it is the fiercest coffee market on the planet. So every other week there's a new coffee brand, a new taste, a new flavor, a new this, a new that. And so when you're Starbucks, when you're Peet's Coffee, your traditional growth model was, we can open up a new store, down the road, and we'll generate revenue that way. We can institute a new create a new product. That was fine up until about 18 months ago, and now the whole market has shifted. And so the new forms of growth, we don't quite know where they're at. Other things such as this is the toughest job market for anybody, including graduates, in over a generation. So what we're seeing with graduates, a lot of them are deciding to go to a graduate school, and maybe if they even already have a master's, to go for a second master's to kind of put that off so they can continue to build their skill set.
One thing that stood out to me in kind of the pre-interview with you is the fact that if you're a manufacturer in China and you're not in the productive or strategic productive forces, or whatever you want to call it, in the new three of Xi Jinping, you're probably running a factory just to keep it running so you don't lose employees and the factory does not go derelict, right, during this slowdown. So is this just a product of top-down directives from the government saying, these industries you're going to make money, these ones you're going to have to take it for the team?
I don't necessarily think that they think you take it for the team. I think it's definitely clear where the new avenues of growth in the country are. right? But again, there's nothing wrong with exports. There's nothing wrong with making masks or PPE or other, tools at Home Depot. And so those are still ongoing. But the challenge is both with the slump in North America and Europe, as well as here, the shift between, we knew what the growth drivers were: infrastructure, real estate, retail to some degree. So when you're producing steel in your steel mill, and historically you would just give it to real estate developers and contractors, now what do you do with it, right? So there is this rebalancing going on, and we don't quite know the roadmap where that's going to go.
You mentioned how tough this job market is. Obviously, we deal with this youth unemployment that's still quite high. How difficult is it to fill some of these positions in the labor market now?
Oh, well, there's plenty of employees around. I think the difficulty really for businesses is what's the skills set that's available. So again, when you talk to manufacturers, particularly down south, Dongguan, Shenzhen, Zhuhai, Zhongshan, they're saying, hey, listen, I can find labor. That's not a problem. It's the skilled labor that's really the issue. And Stephen, to your point, this is why factories are continuing to run. If they slow down or they stop, they will lose those employees because the employees want to work. They'll go do something else. So in China, there is not necessarily a demographic issue at the moment. What it really is it's a skill set issue. There are enough people, but the skill sets are not matching. And so one of the things we are seeing is, again, students are going back to school, or there are some training jobs or upskills in certain companies that they're trying to get this problem somewhat resolved. But again, overall, it's unclear what new industries are going to suck up all of that talent.
What's on the other side? What sectors are growing?
Automotive, to some degree, although the ICE it's a sunset industry. Everything is shifting to EVs. Things like you mentioned new productive forces, so anything related to tech, right? And it's not just the tech, and we think of tech of, here's a semiconductor chip, but that actually doesn't look at the whole ecosystem. The whole ecosystem is transforming. So it's not just the production, but it's also the design process, the research, the training. We're seeing universities now align with certain companies to train graduates specifically so they're engineers to go into, design or fabrication of these kinds of things.
Well, Cam, you have a unique position as well, knowing the manufacturing space in China and the eastern seaboard there. What generally is your message? And you do have an ear in Washington. What generally is your message to them as we head into a very vitriolic, if you want to call it that, election year, where you have one candidate, Donald Trump, also talking about 60% tariffs potentially all across the board. So is the noise going to kind of drown out the reality that you're seeing or not?
To some degree. I mean, when we talk to policymakers, a lot of it is, of course, as American businesses or even businesses, we want to align with what the policies are. How do we de-risk? We're not going to decouple, but we are de-risking as well. And to be fair, a lot of Chinese suppliers are also de-risking. They also want to go into Southeast Asia or Mexico or other places, partly for growth, but also partly so they can continue to expand supply chains. To your point, oftentimes what we're hearing now is China's the big dog on the block. We need to do something about it. So we're going to put in tariffs and controls. And if you don't like it, tough. And as a business, that's difficult to find out how to maneuver and move forward sometimes.
What about, just very quickly, what about the flow of American business people into China? Has that improved since we've had these 2 high-level visits this year so far? At least two.
Slightly. I mean, we are seeing more people come, but it's a drop in the bucket compared to what it was in 2019. And so this is, again, one of the challenges. You do hear from executives, I'm worried about going to China. I'm worried about what could happen. On the other side, you do also hear that from Chinese. I'm worried if I go to the U.S., what happens? And so you see this kind of not just mistrust, but also the inability to really break through some of those barriers. But we just had that J.P. Morgan conference in Shanghai. Jamie Dimon was in town. So I think, to be honest, like all things in China, it just takes a little bit of time to kind of unclog that. So we're actually pretty confident that businesses and people for business are starting to fly back more, not just for the rest of the year, but moving forward.
Cameron, it's great to have you in town.
Thank you.
Safe travels back to Shanghai. Cameron Johnson, their senior partner at consulting firm TidalWave Solutions. The next hour, we also have a big guest coming up as well, looking at everything from, you heard him back about a year ago talking about China possibly entering into this balance sheet recession, similar to what we saw back in Japan. Richard Koo, Nomura Research Institute chief economist, will be joining us to talk more things beyond that, also when it comes to this whole export-led economy in China, too.
Very quickly here, just a group of movers we're seeing. This is in Taiwan. A lot of the chip sectors, well, a lot of the chip stocks. TSMC is at 1%, Han High Precision, might be down to FTA talks, might be down to the fact that Nvidia is doing very well. We'll dig deeper into the story coming up next. Plenty more ahead. This is Bloomberg. All right, welcome back. You're watching the China Show. French Finance Minister Bruno Le Maire says the G7 is united in its concern over the threats to the global economy from China's industrial overcapacity. Speaking from the group's meetings in Italy, Le Maire also confirmed its commitment to funding support for Ukraine.
We are on the right track to get final approval by the G7 leaders summit. The Holy Grail is to ensure long-standing funding for Ukraine. And make no mistake, the G7 countries are fully committed to provide long-standing political and financial support for Ukraine. So there are many options on the table. We will work on those options to find the best one. We need to have the most solid option from both a financial and legal point of view. But I want to leave no uncertainty. We will find an agreement and we will provide to Ukraine the necessary funding.
In terms of China, where would you say that you sort of agree with the United States and disagree with the United States? Where in your approach do you think that there is total synchronicity, and where do you want to see some changes?
We agree at the G7 level that we have an issue with the Chinese industrial overcapacities. And this is not a question, anything against China. China is an economic partner. But we have an issue with the economic model in which China is producing more and more cheaper industrial devices. Because it could be a threat not only for the EU, not only for the US, but for the global world economy. And we need to address that issue. Having so many industrial devices for the green industry at a very cheap price on the global market could jeopardize the whole world economy and the growth in the world. So that's why we need to address the issue. We need to engage China, and we need to find solutions.
What is Bruno Le Maire's sort of recipe for unlocking the good of Europe without the bad of Europe?
Innovation, innovation, innovation. We should innovate before regulating. The lack of productivity in Europe should be a matter of huge concern for all the member states of the EU. When you are comparing the US and the EU over the last 3 decades, what is really striking is the fact that the gap between the US productivity and the EU productivity has been widening. I cannot accept that. And when we are explaining that we want more innovation, more risks, less regulation, less rules, less directives, it is for the view of getting more productivity, which means more prosperity for our people, more jobs, more factories, and more independence.
Debt levels in France. The IMF says more needs to be done. Your own fiscal council says that the plans lack some coherence. What do you have to do to get sort of that debt level under control, particularly with an S&P credit rating decision coming at the end of the week? Do you think that borrowing costs will go up in France?
No, I think that the summary of the IMF is quite clear. The French strategy to come back to sound public finances is the right one. This is very clear in the IMF report. It is the right one because our goal to come back under the 3% of deficit by 2027 is wise and appropriate, and because we have a very clear and I think a very credible strategy based first of all on growth. We have growth in France. Second, on the reduction of public expenses where needed, and that's exactly what we are currently doing. And third, on structural reforms. And the Prime Minister will be announcing in a few days a new reform on the unemployment scheme, which I think is the very clear evidence that we remain fully determined to stick to the path of reforms, to stick to the path of sound public finances.
Bruno Le Maire there, the French finance minister, with our colleague Oliver Crook. We got plenty more ahead. This is Bloomberg. All right, another check of the markets here this morning. We're watching this big trading debut in Hong Kong. Kunabox, I want to say, I don't want to butcher it, but this is the marketing services firm. First day listed here, and you're seeing a little pop in the share. So it looks like, at least for today, things are looking good. That share price was like $25 a share was when things started.
Yeah, raised about, there you go, bottom of your screens, $500 million. Okay, Evergrande NEV has been suspended for just over 10 trading days or so. Pop out of the gates here, 87% there. And the unit also saying that liquidators have found a potential buyer. Okay, more on that story a bit later on, although we are coming up highs. We were up as much as over 100% at one point on this specific stock. Broadly speaking, though, things have picked up since the open 25 minutes back, so we are up now in price at least about a quarter of 1%. Hang Seng Index, quarter of 1% as well there. We're being extremely generous with that, of course. In the next hour of the show, of course, stay tuned for that press briefing on that Trilateral that's taking place in South Korea. More headlines on that. Plus, of course, we'll be having Richard Koo out of Nomura Research Institute to talk us through, of course, his updated view, if any, on the Chinese economy. This is Bloomberg.
Welcome back to the China Show. Here's a look at the HSI just a half hour into the session. At least we're gaining a little bit more traction than maybe just a few minutes ago, but we're still only about 0.4% to the upside. But still, looks like we're seeing some gains here after we've seen declines for 4 days on that benchmark. H shares are also catching a slight bid here this morning, and certainly where you're seeing a lot of optimism, at least some, in the region, the back of those inflation expectations out of the U.S. that came out on Friday. Taiwan's at a record here right now on the fact that Jensen Huang is basically there. So certainly we're watching very closely these chip stocks this morning, Dave.
Yeah, talk about the potential. I mean, talk about influence, right? Yeah, guy lands one day, the market surges the next. Well, I mean, that's really what happened with Nvidia, right? And this entire global equity market. Check out all the memes that came out on the weekend on Nvidia. In any case, of course, yeah, we're looking at that as well. Certainly, the backdrop here is we're going into a week where most of these markets have lost some momentum. Chinese markets have gained a little bit of that in the last few minutes or so. There's thin volume. It's Memorial Day, of course, so it's a long weekend in the U.S. It's time to take stock. In fact, Laura Wang dropped this in our inboxes on Monday, the team at Morgan Stanley, basically saying that, and this, by the way, this comes about a week after the same team came out with a note back then that when you look at technicals, the rally in China did seem like it was ripe to trade range-bound. And now when you look at some of the catalysts, they're saying a follow-up here that there doesn't seem to be anything in particular over the near term that might suggest we could get a more positive.
Maybe the plenum, right? According to Kendra Lau from Goldman Sachs, that probably is the next sort of sign or guidepost here of where the policy implementation is going to lie. That, is why he's staying still positive here right now, because despite what we've been seeing, this 30% rally MSCI China so far, you take a look at valuations, and we're still talking about, 10.5 times earnings, right? So it's not like things are looking expensive in any way. And history suggests we could still see some upside here right now.
Yeah, with the earnings and positioning is very light, as they were mentioning there as well. Very briefly, some e-commerce stocks that we're tracking here. So this is really on the back of some news. Well, I guess more policy support perhaps is really on the cards here. And as you can see, these are not your usual names. A lot of these are listed on the mainland, as you can see, with the specific tickers on your screens. That's one group of stocks. We're also looking at Kaisa. On the back of news right now, this liquidation hearing has now been adjourned to June, and shares are up 4.4%, June 24th to be more specific. And also, there's also some other news in the property sector with SIFI Holdings, separate, of course, idiosyncratic, corporate level, that SIFI's now looking at potentially a better environment to raise funds. They came out with a statement to the exchange earlier on, talking about how yuan-denominated loans are perhaps one option. The whitelist certainly helps bring down the cost of capital moving forward. So I guess in many ways it might be a Kaisa story. It might also be a general property market story. Asia ex Japan, Asia ex China to be more specific, looking like this as we get underway this Monday. Core PCEs coming out this week, U.S. core PCE, and also PMI numbers out of China. Bond futures are trading slightly to the upside, so effectively yields should be pushing lower, as with most other currencies there.
Yeah, there you go. The TAIEX is up more than 1%. We're at 21,850 or so here this morning. So certainly that is, we'll talk a little more about the whole Nvidia effect on Taiwan in a minute, and really what's at stake as well coming off of this inauguration, these military jewels out of China as well. Also this delegation in the U.S. that is also there separately from Jensen Huang's trip. All right, we talk about what's the week ahead. Certainly, economic data is going to be top of mind this week. You take a look at the U.S. We talked about the GDP numbers on Thursday. You have that this PCE deflator, the Fed's preferred gauge that comes out. That could be the next sort of guidepost there and where this bond market's going to go. Obviously, we're going to talk about CPI numbers coming out of Australia, retail sales from there too. We just had those industrial profits, 4.3% year to date when it comes to China as well, and PMI numbers out of China to wrap up the week.
There we go. Maire Nicholas with us right now, our MLive strategist in Singapore. Maire, take your pick. What's top of the agenda as you look ahead this week?
Yeah, it'll be about the PCE deflator, really. It's about inflation and, you know, the hawkish Fed rhetoric. Does it reinforce that hawkish Fed rhetoric and embolden some of the bond bears out there? Because at the end of the day, it's really now just, and as we saw last week, it was really about the Fed, and it's going to continue to be about the Fed. So we still need to see inflation numbers creeping lower if we're going to get the Fed to come back in and say that they're going to start easing, but it doesn't look like it anytime soon, especially with PCE deflator. Even if it's supposed to come off, it's really coming off because, as Bloomberg Economics explains, is really about the volatile airfares. So it's not really some of the underlying things that are important, like housing.
Over in the Chinese market, obviously, we're looking for these catalysts here right now. We've seen maybe a little bit more when it comes to criticism on China's trade practices, the like from the G7, Biden reimposing some tariffs over the weekend as well. How do you think investors are looking at this?
Yeah, there's no question going to be some jitters surrounding this and this reigniting of the trade war. But I think one of the things that we'll see as a result of this is increased stability in the CNY, because obviously you don't want to see anything threaten or show that they're increasing that the threat from further tensions by, let's say, weakening the currency even more or even starting a trade war. So I think as a result of all this, where you're going to see this most is really coming through in the CNY, which we saw today in the fixing, where they've only tweaked it slightly, and I think that'll be the gradual pace that we see going forward on the currency.
Mary, thank you, Maire Nicholas there, our MLive strategist joining us out of Singapore. Coming up, we're hear from Nomura Research Institute's Richard Koo on why they think sustaining an economic recovery with exports will be a challenge when it comes to China. That's next. This is Bloomberg.
Welcome back. Happy Monday. You're watching the China Show. I guess it's a recap of what we've heard and seen from policymakers in recent weeks to really kickstart and jumpstart this economy. And certainly some new measures have been taking place, signals in recent weeks from Chinese authorities. Yet last week, of course, Xinhua reporting the president, she wants deeper reforms and breakthroughs from some of the country's key sectors, including including employment and housing. That's after, of course, Beijing introduced a property rescue package aimed at boosting the real estate sector, which included a $42 billion funding channel from the PBOC to then help government-backed firms to buy excess inventory from developers. China has also rolled out at least 2 batches of ultra-long special bonds. One was issued, of course, about a week and a half back. The other, of course, was we had the results from the bond auction on Friday. Certainly a lot of demand for those ultra-long bonds. So have we turn the page, I guess, on this conversation?
Yeah, key question to be asking our next guest here of the hour, Richard Koo, chief economist at Nomura Research Institute. You may remember him just about a year ago, really warning about China entering possibly into a Japan-like balance sheet recession. Richard, it's a pleasure to have you here on the program. Let's start on the stimulus measures, these policy pivots that we've heard on multiple fronts, whether it's monetary, fiscal, on the housing market. How significant is it? Is it enough to turn around this economy?
Well, the short answer is probably no. And the reason I think this way is that China's entering what I call balance sheet recession. And balance sheet recession happens when people start minimizing debt instead of maximizing profits. In that, all these people who leveraged themselves during the bubble, when asset prices collapse, asset prices are down, but the liabilities are still up there, and your balance sheets are often underwater. You have to reduce this debt. But when everybody does this all at the same time, the economy really suffers, because in a national economy, someone's saving money, someone else has to be borrowing money. And in the usual economy, those of us in the financial sector will take the money from the savers, give it to someone who can use it. And if there are too many borrowers, rates are raised by the central bank. Too few borrowers, rates are lowered, to make sure that this cycle is maintained. But what we entered in Japan 30 years ago and what China may be entering now is a situation where you bring interest rates down to zero or to very low levels. Still, there are not enough borrowers because people are repairing balance sheets or just not borrowing money, period. And I still hear that a lot of Chinese people are reluctant to buy real estate with borrowed money, especially when you don't think the prices will go up, but it could actually come down even more. And in that environment, it's very difficult to get borrowers to come in, even with very low interest rates. And some of the structural reform arguments that I hear from Chinese, I mean, those reforms are all welcome, and I think some of them are long overdue. But the question is, would that be enough to fill the gap from people who are saving money and people who are not borrowing money? If I may give you any numerical example, suppose I have $1,000 of income myself and I spend $900 myself. The $900 is already someone else's income, so that's not a problem. The $100 that I save will go through a financial sector like us and give it to someone who can use it. And if there are too many borrowers for the $100, rates are raised, rates are lowered if there are too few, and that's how the usual economy moves. But in what I call balance sheet recession, what happens is that I have $1,000 of income and I spend $900 myself. That $900 is not a problem, but the $100 often gets stuck in the financial sector because there are no borrowers, even at very low interest rates. And in that situation, the only way you can turn the situation to improve the economy is for the government to borrow money. And why is that? Because the private sector is doing all the right things, trying to repair their balance sheets. So you cannot tell them not to repair balance sheets. So if everybody's doing the right things, but you get the wrong result, this is called fallacy of composition in English, then the government, which is outside the fallacy of composition, has to come in. And the amount that Chinese government is coming forward, I don't think is sufficient to really stabilize and turn the situation around.
Right, and Richard, maybe the central government is starting in that direction, and I'm not sure if you agree with that. Narrative, because the central government has started to come out and issue special purpose bonds, and I'm wondering whether you think that's the right route, because you mentioned the government needs to start borrowing, and also what is a number you think that the central government or the government should be borrowing, given the scale of the Chinese economy and the debt burden they're trying to unwind as well?
Well, on the first question, we all pay a lot of attention to central government numbers, but if you put in the local provincial governments, the Chinese government financial deficit, which is more or less equivalent to total budget deficit, was almost 7% of GDP at 2022. So when the budget deficit before the bubble burst is already 7% of GDP, there's always a resistance to increase this more just to fight the balance sheet recession. Because balance sheet recession started probably 2023, not 2022. 2022, we still had a bubble. When Japan fell into this thing, Japan had a budget surplus during the bubble days. So it was easy for the Japanese government to increase deficit spending because it was in surplus. But for the Chinese government, even though central government budget deficit is not very large, if you put the whole thing together, we call it general government, then the budget deficit is already 7%. And I think there's a strong resistance from local governments, provincial governments, and probably from many economists who are saying that, hey, the debt is already too large. How can we increase this any further? So that's where the resistance is coming from. The difference between the Japanese and the Chinese situation, another difference is that back in 1990, when this whole thing collapsed, the whole bubble collapsed, no one in Japan, including myself, had any idea of what we were entering. That is to say, BOJ brought rates down to zero, nothing happens, fiscal stimulus never created this Keynesian pump priming, and all those structural reform measures never produced the results they were promised, and so we were completely lost. And we now know why that is the case. If you put in a structural reform, unless someone then responds to that and immediately borrows the $100 that I mentioned to you earlier, so that it's $900 plus $100,000 against the original income, that is not likely to happen with the structural reform. These things typically take a long time. So I'm very happy that the Chinese government is coming up with these structural reform issues, but for those to have an immediate effect, I'm very, very skeptical.
And why you're saying that China can't really export its way out of these problems, Richard, given the trade surplus. But that is the policy direction that we're seeing with Xi Jinping's agenda when it comes to higher-end manufacturing, EVs, the like here, which is now facing pushback from Western nations with tariffs and the potential threat of tariffs. How do you see this industrial policy playing out then?
Well, I was in the middle of U.S.-Japan trade friction 30 years ago. Walter Mondale, the ambassador to Japan at the time, realized that I'm on Japanese television a lot on these economic programs, but I actually carry an American passport. So he asked me to get in there and pitch the American argument on why Japan should open its market and so forth. So I was pushed into that debate as a private sector citizen, still employee of Nomura. But it was a very ugly debate, and bad feelings on both sides were growing very, very rapidly. So I remember all of that. It's not an experience that typical economists in Wall Street firms have, but I ended up having it. Then I look at what's happening in China today. I see the same pattern. And the key point is that at that time, Japan was the largest trade surplus country in the world and running a huge surplus against the United States. Now we see China in exactly the same position. And China is the largest trade surplus country in the world, running a huge surplus vis-a-vis the United States. And so the same pattern is developing by people saying, well, you're already running the largest trade surplus in the world. How can you expand that more and destabilize the global trade? And furthermore, because China is paying all these subsidies to many companies and many industries, a feeling within the trade circles is that, hey, China's doing the subsidies, why can't we just fight with the tariffs? And you're not supposed to raise tariffs within the WTO membership countries, but when the other side is doing something that you're not supposed to do, then of course you think you can do the other things to defend yourself. And that's the I think where the debate is moving. But I don't think China removing their subsidies or various helps to the industries anytime soon. I mean, so many of those companies are, of course, government-owned. And so my feeling is that unless something is down, perhaps on the exchange rate, it's going to be very difficult to stop this trend from getting worse.
And I was about to say, Richard, since you brought up the exchange rate, correct me if I'm wrong, the main difference between Japan then and China now was the exchange rate regime. But all that said, you know, if China was to let markets fully determine, say, where dollar China, the exchange rate was to be trading right now, do you think it goes in the same direction as dollar yen after the bubble burst, which is effectively go to about 80?
Well, at that time, the U.S. was so upset, and the U.S. government made its displeasure known that Japanese are not opening its market and so many other restrictions. That scared the investors in Japan from buying U.S. treasuries. And if the Japanese investors stop buying U.S. assets, if you just look at the trade, because Japan is a huge surplus country, that basically pushed the dollar lower, yen higher, and we ended up, 79, 75 yen to the dollar by 1995. That basically precluded Japan from running export-led economic growth. Now, in the Chinese case, that doesn't work that way because there's so much capital controls to begin with. And so exchange rate is still largely under the control of the government. But if the government tries to keep the exchange rate from appreciating or trying to weaken the yuan, then my sense is that U.S. push for more tariffs will get even worse.
Richard, that's all the time we have left, but thank you so much for joining us. We could have continued this for the next hour. Richard Kuthera, Chief Economist at Nomura Research Institute, joining us live from Taipei here this morning. We got plenty more ahead. This is Bloomberg. Here are some of the stories that we're following for you today. A group of minority holders of insurer Great Eastern are resisting a $1 billion takeover bid from OCBC. The group of more than 100 shareholders says the offer to buy 11% of Great Eastern at around 25 Singapore dollars per share is too low. OCBC says the number reflects a roughly 40% premium over the price in both the month and the year before the bid announcement. Luxury sneaker brand Golden Goose is said to be planning an IPO in Milan as soon as this week. Sources tell us that investors are expected to value the shoemaker at about 11 times this year's estimated earnings. Golden Goose would join CVC Capital Partners and Spain's Pug Brands in moving ahead with listing plans in Europe. Asia's richest man, Mukesh Ambani, is setting his sights on Africa with a new telecoms venture. A unit of Ambani's Reliance Industries will provide key network infrastructure, applications, and smartphones for Ghana-based Next-Gen Infraco. The company is planning to provide 5G broadband services to mobile operators and ISPs by the end of this year.
All right, let's go through some of these big movers across these Hong Kong markets, specifically as it pertains specifically to the property story. Let's start things off with Kaisa. Now it seems that the company's now given more time to maybe come out publicly, which it's yet to do, present a restructuring proposal. So the liquidation hearing has been pushed now to June 24. The hearing, of course, was the second one held since the original petitioner asked them to, of course, quit. And the key group of creditors with then, I guess, the offshore borrowings, about a third of that was actually set to take place. Right, that's number one. Number two, we're looking at Sifi Holdings, filed I guess in many ways a statement or an update with the exchange. Certainly more options on the table now, according to the developer, in terms of funding channels, adding loan options for offshore lenders in that proposal. That's so far what we know. It's come off highs of the day. As you can see, we were up as much as 6% at one point. And very quickly, the other one is Evergrande NEV, resuming trade today, was suspended since May 17th, and the stock is up only 85%. It was up as much as 113%. The news here is that the firm said liquidators are in talks with a potential buyer who may also extend a new line of credit to then support production. There we go. That story there. And of course, across the chip space, particularly in Taiwan, catching a very strong, but in fact, on the equity markets across the region, this is your equity market story.
Oh, yeah.
Today, we're record highs there, and I think someone touched down in Taiwan on Sunday.
Only the godfather of AI, right? So, we're definitely talking about Jensen Huang. He's about to come up at the Computex, this big conference there. Also coming separately with a U.S. delegation to Taipei. So certainly there's a lot of tensions at risk here, but certainly that's helped lifting the AI stock trade here once again, despite those tensions. Plenty more ahead. This is Bloomberg. $11:29 in Tokyo. Japanese markets are going to that lunch break in just a minute or so here. It's very green out there. And you're seeing a little bit of green, I guess, across these equity markets. Just
it
a
is very
slight bit. Green. Surprisingly green. We don't usually see it that green, but there you go. You take a look at when it comes to equity markets. We're seeing a little bit of upside here today. Dollar yen, that's where you're seeing a little bit of that, I guess, rare strength come through. We're back below that 156 level, or 157 levels, I should say. But certainly we're hearing some lines from Ueda this morning to move cautiously to re-anchor price expectations. We have Tokyo CPI this week as well. Maybe that feeds into what the national picture is going to look like. But, you know, I think most people still think any sort of signs of the data really isn't going to move the needle for the BOJ to actually move this year. But certainly any sort of commentary is interesting. 101 for your 10-year yield now.
Yeah, that's picking up ever so slightly as well. Plus, on the Japan, Korea, and also China story, there should be the press briefing, which should be starting, I guess, in the next 20 minutes or so, if things are on schedule. More on that in a moment there. Asia ex-Japan is looking like this. So we talked about the Taiwan story. There's really a chip bid that's lifting that specific market. In fact, that's going to be on your first row on your left, MSCI APAC Infotech Index. That's where you have some of these big chip plays as well. 31%. U.S. futures are down slightly, just in terms of sector groups here. Asia dollar index is slightly bid as well, and Asia ex-Japan a third of 1%. So it's fairly quiet starts, I guess, to a trading week, which should be busy based simply on paper at this point.
Yeah, and we're watching, I mean, we're wrapping up the earnings season in Asia as well. I mean, the last part and the last leg we're looking at, maybe there's a bit of a healthcare sort of theme involved here as well. We're talking about Alibaba Health, also Apollo Hospitals Enterprise in India are some of the companies set to report this week. Let's bring in Harshita Swaminathan is with us here right now. Let's start with Alibaba Health. What are we expecting on those earnings?
With Alibaba Health, we're expecting a slight acceleration in both profit and revenue. The mainstay pharmaceutical sales business, it's important to note that in the previous financial year, we saw the base that was set was fairly high because of the COVID pandemic. So because of that, it's hard to see a lot of growth in revenue in percentage terms. So the standout performer this time around is going to be the digital business, which includes the app as well. We're looking at almost 50% revenue growth for the year. Speaking more longer term, the company is looking at expanding into hospital management systems and cloud-based systems that are used by hospitals. So these should help the company diversify and rely a lot less on the mainstay pharmaceutical sales business.
Yeah, and so apart from this, Harshita, are there any other players we should be watching out for this week?
Later today, CSPC Pharma should also report. We're looking at a slight contraction in revenue for the first quarter, but what's more interesting will be the outlook from companies like CSPC, because we're seeing a kind of shift in trend. So far, these companies have just been manufacturers of generic drugs, but now we're seeing them create their own innovative new drug products. CSPC itself had 5 new drug approvals last year, and they have more targeted for this year and the next. So this sort of shift in, and that's a kind of shift in business model itself. So that is leading to a lot of optimism for their earnings this year and the next year.
Fantastic, Harshita. Thank you. Harshita Swaminathan there on a preview of these Chinese healthcare earnings coming out these next, 48 hours, give or take, from now. Right, now let's talk about what's happening in Taiwan here. A bipartisan delegation of U.S. lawmakers and separately the Nvidia boss, Jensen Huang, have arrived separately in Taiwan. They've touched down just after China ended its biggest military exercise in a year around the island. For more on the story, we're joined by Min Lo here on set, our China correspondent, to talk us through how China is going to respond to this, given the timing of all this taking place.
Yeah, I think Beijing is again going to see this as yet another act of blatant provocation. I mean, the timing of it coming just a week after President Lai was inaugurated, it really shows a sign of support for this new president that Beijing has labeled as a dangerous separatist. And also, it feels like a snub to China coming so soon after China concluded those military drills as well. And I should also say that the Chinese embassy had sent an email to Congress warning them against sending this group to Taiwan. And this is a group of bipartisan delegation led by the chair of the House Foreign Affairs Committee, Michael McCall. They are set to meet with President Lai in about half an hour's time when they will discuss things like Taiwan-US trade relations and peace and stability across the Taiwan Strait. And then the Nvidia boss, Jensen Huang, he arrived last night. He's set to make a public appearance at a tech expo in Taiwan. And we know he's frequently commented about how important Taiwan is to this global tech supply chain. We know Nvidia has huge ambitions in the AI space. It's been inundating Taiwan's TSMC with orders. And at the same time, the U.S. is on this, aggressive onshoring campaign to just, ensure that the global supply chain is protected from any potential disruption should conflict occur in the Taiwan Strait. So there's a lot of economic and security issues to be discussed.
Yeah, the markets are not listening, though, right? They're like the rock stars in town.
Yeah.
I'm just going to keep buying up these chip stocks.
I wonder what he's wearing.
It's hot.
Yeah.
I don't know if that leather jacket holds in this weather. This visit, though, does come a week before the Shangri-La dialogue in Singapore. Do you think this visit in any way impacts or derails these talks between defense, the heads of the defense in the U.S. and China?
Yeah, certainly it's not going to create a friendly atmosphere as we head into these talks. But if you take a look at the military drills that we've seen in the past week, the scale of it still doesn't match what we saw when then U.S. House Speaker Nancy Pelosi visited Taiwan. And so that suggests that China is thinking very carefully about how to respond to these provocations. And we know that China and the U.S., they achieved this very hard-won détente after the two presidents met end of last year. And amid this deluge of tariffs that are coming China's way from the U.S. and potentially the EU as well. And amid this very weak economy in China with domestic consumers not spending, I think it really isn't in China's interest at this time to really ratchet up tension even further. So I think China, they're likely to issue very stern warnings to the U.S. again, that this is a red line that the U.S. shouldn't cross. But beyond that, we'll have to wait and see. But it's going to dominate discussions this weekend for sure.
All right, Min Lo, our China correspondent, joining us there with the latest on this Taiwan visit. On the backdrop of more what's coming up here, we're expecting to hear a little bit more details of how this rare trilateral meeting between China, Japan, and South Korea played out in Seoul as well. Xinhua is reporting that Chinese Premier Li Qiang is stressing that ties among China, Japan, and South Korea are unchanged. For more, let's bring in our Chief North Asia correspondent, Stephen Ingles, what we're hearing so far.
Yeah, we're getting lines out of the readout of Li Qiang's meetings there with President Yoon, of course, of South Korea, and also Prime Minister Kishida of Japan. Li Qiang urging Japan, South Korea to uphold the spirit of autonomy. Again, so this is sort of a veiled commentary towards their, I would say, coming on board a little bit with the United States and the America's export controls and the like. Japan has pushed back on further export controls, but South Korea and Japan obviously have had a history of bad relations. They are starting to get better relations. They have kind of shuttle diplomacy, and they've agreed to continue to warm their relations. So it comes at a very critical time for China to kind of come to the table with South Korea and Japan as they're warming the relations and have a complete dialogue without the United States necessarily in the picture. But of course, the United States is very much at the backdrop. So we're getting more comments coming out from Xinhua, from Li Qiang, urging Japan and South Korea to oppose playing camp politics, which is what I just alluded to as far as forming this camp with the United States on trying to contain the rise of China. And China's urging cooperation resumption with Japan and South Korea. And as you mentioned, Yvonne, essentially what the main line is that the relations between China and Japan and China and South Korea have remained unchanged despite increasing geopolitical tensions over the last 4 years.
Which comes down to your point, the bifurcation of supply chains, and China, of course, asking at least their South Korean counterparts, let's keep things stable.
Yes,
at least that's 2-bit as far as the trilateral is concerned.
I absolutely think that's a first step that China wants to maintain, to make sure that its supply chains and supply chains in East Asia, supply chains that are separated by only a small strip of water, is how Li Qiang put it, that they are neighbors, should be friendly neighbors, and there should be resilient, strong, and stable supply chains. And also, to that point as well, the Nikkei has been reporting that the FTA talk resumption there could be a resumption of talk of a free trade agreement between these. There are a lot of issues to overcome, and Japan's already brought up a lot of the issues in the talks that we had yesterday on the sidelines of a dinner and on the sidelines ahead of this trilateral that was held this morning, essentially bringing up the subsidies issues and the distortion of trade that we've heard from the United States and now even the G7.
It seems like in some ways, you talked about the frictions between China and Japan. China seems to be at least trying to assuage the South Koreans to maybe not join that camp of being closer to the U.S. and maybe trying to be that wedge between the U.S.
Yeah, absolutely. I mean, this is the first time in 5 years we've had this kind of trilateral with the leaders, the premier and then the prime minister and the president of these three countries. So there's been a gulf that has been created over the last 4 or 5 years with the export controls from the United States, with the bifurcation of trade, through the pandemic. There's been a lack of dialogue on what the three of these nations absolutely want to find some common ground, and that is trade. Geopolitical issues, there's going to be differences, whether it's North Korea, whether it's the East China Sea, even to a certain degree the South China Sea. There's going to be differences there. There's going to be differences over Ukraine for sure. But again, on trade, they're at least going to be talking, and if they can get the ball moving again on a free trade agreement, that's one thing. If they can also have that supply chain resilience without necessarily Seoul and Tokyo parroting Washington, that's a win for Beijing.
Stephen Engel, our Chief North Asia Correspondent, on the latest on this trilateral summit that was, of course, paused because of the pandemic. It's the 9th version, though, of the specific one, and we should be watching out for any news lines coming through. You understand that the press briefing should be starting at some point this morning. There we go. We'll put it that way. Plenty more ahead. This is Bloomberg. Right, welcome back to the show. An update on what's taking place in Israel here. Well, Israel part of the story, of course. Israel is pressing ahead with its operations into the southern Gaza city of Rafah, despite a UN court effectively ruling that ordered it to stop here. Now, the advance comes after dozens of people were killed in an airstrike near the city on Sunday. For more on this, let's bring it Derek Wallbank in Singapore for us to take us through the story. Yeah, Derek, get us up to speed here.
Well, David, it's as you said, right? There was a court ruling, an international court ruling that said that essentially, as I think was widely reported, that Israel needed to halt its offensive into Rafah, into that Gazan city. Concern about civilians and casualties and things of that nature, as well as escalating, I think, pressure from the international community there. Israel is interpreting this in a slightly different way, and with completely different outflows. Their interpretation basically says that they have to limit civilian casualties, which they say that they're doing. Now, as you mentioned, we have seen strikes come in there. There have been differing points of emphasis into what these strikes are achieving. We're hearing from Palestinian authorities that suggest that there have been civilian casualties again and again and again in these. Israel has come out and said that some of their operations in Gaza of late have hit some senior Hamas targets. So again, it's very much kind of more of the same, really. The court did rule, and the operations continue.
It seems like the U.S. have they been a bit silent about this ruling? I'm just wondering, are we likely to hear anything from the Biden administration?
Well, Yvonne, I actually think that this is a really interesting position. It puts the U.S. into a really interesting position as sort of Israel's guarantor at the United Nations, right? The United States' veto has long protected Israel at the United Nations from all manner of things. And there is a mechanism by which countries could go to the Security Council to say, look, Israel is flagrantly flouting this ruling. There need to be sanctions attached to that in some way. And then the Netanyahu government would be relying on the United States to have to exercise that veto. I do think that that comes with a certain amount of risk, right? We have seen, as you alluded to, a divide between the Biden administration and the Netanyahu government in Israel over the Gaza operations, widening recently, particularly about Rafah. So there is a little bit of question mark there in what I think had previously been something that people would rely a lot on. I also think that it's worth noting that, as we reported just late last week, you have seen American brands in some other parts of the world start to feel some impact. The earnings season was showing us that everyone from can makers for Coca-Cola in Pakistan on to McDonald's and KFC operators throughout Asia and throughout the Middle East have seen some impact in their most recent earnings from pullbacks by consumers who are upset about what's going on in Gaza and see those places as having ties either to Israel itself or to the United States and some amount of dissatisfaction. So there is going to be that escalating pressure, I think, in a lot of different ways. And as I say, the backstop at the United Nations is the U.S. veto. And Joe Biden has been exceptionally critical, has he not, exceptionally critical of the way that the Netanyahu government has proceeded with its case in Gaza. Now, whether or not that will be enough to convince Israel to change course, it hasn't yet.
Derek, thank you. Derek Waldman with an update on what's going on. Some other stories that we're following for you this morning. North Korea has given Japan notice that it intends to launch a rocket soon to deploy a satellite. According to Kyodo News, the window is open through June 4th. North Korea said it successfully deployed a spy satellite last November, a move Washington and its allies say violates UN Security Council resolutions. Bad weather hitting the Philippines as the country's first storm of the year intensifies. Officials warn the tropical storm Agon could strengthen into a typhoon before leaving the Southeast Asian nation on Wednesday. Authorities say about 7,000 people were stranded in various seaports, while some flights have been canceled. And a Qatar Airways flight has hit severe turbulence over Turkey, injuring 12 people. The Boeing 787 landed safely as scheduled in Dublin, and Qatar Airways says it's investigating the incident. Last week, a Singapore Airlines flight made an emergency landing in Bangkok after severe turbulence killed one passenger and injured dozens of others. Twice in a week, though, Dave. Certainly is kind of scary.
Yeah, there we go. Actually, the first thing I read this morning when I woke up. Okay, let's talk about take a step back and talk about the global economy right now. So you do have concerns over a two-speed global economy skewed by U.S. strength and, on the other side, European weakness. Certainly was a hot topic at the G7 meetings that took place in Italy. You had OECD Secretary General Matthias Cormann telling us about really these growing set of challenges.
Many of the debt issuance will have to be refinanced and refinanced at higher rates, and the challenges here are obvious. And so what we've been warning of is that there is a real need to rebuild fiscal resilience and to have credible medium-term strategies in place to address the debt challenge.
And when you look at the lists of risks across the world, right, whether it's inflation, growth, geopolitical, what really worries you the most right now?
Well, look, I mean, the key risks that we're focusing on, obviously, there's a risk still that inflation proves to be more sticky than anticipated, but conversely, there's also the risk that monetary policy measures will overshoot and that we end up with having too hard an impact, and that is something that remains challenging to balance moving forward. But then the geopolitical risk is the very significant risk, because I mean it's sort of very hard to see how you can take effective action depending on where you are in the world. But you are on the receiving end of potentially very significant economic and social implications, of course. I mean, depending on what happens in the Middle East, we could see another supply shock. We could see another supply shock causing an inflationary increase. And so, I mean, there are, of course, things that are not immediately under the direct control of countries in other parts of the world.
That was our Oliver Crook speaking with the OECD Secretary General Matthias Cormann in Italy, of course. There we go. We'll leave you to look at markets right now. We're slightly seeing at least some better momentum on price. Volumes are on the lighter side of things. It's Monday. Give it some time. Plenty more ahead. This is Bloomberg.
All right, we're looking at some lines that are crossing in this, the trilat between China, Japan, and South Korea. Some lines crossing through right now. We did hear from Premier Lee earlier talking about Japan and South Korea to uphold free trade. There's been some reports about maybe that FTA could be in the works once again, according to some Japanese local media. Now we're hearing from Yoon himself, the South Korean president, saying China and Japan and South Korea seek transparent supply chains and important to seek North Korea's denuclearization. So it's not just some of the economic, the trade issues, but really some of the geopolitics are being talked about as well.
Yeah, I guess in some ways between the Chinese and the South Koreans, for example, they're talking about how the need for stabilization of supply chains is in focus. To your point earlier, they're trying to bring that back closer into their orbit, the Chinese, than they are, of course, with the U.S. It's a separate conversation than when you look at Japan as well. In fact, when you look at Chinese media today, this trilat was actually really took up a lot of real estate and papers.
I think because of just how rare it is to have these three nations together in a room for the first time in some time. So what you're hearing in some of these local media, the Global Times has been talking about this Trilat summit as well, talking about this renewed cooperation between China, Japan, and South Korea will not only inject more confidence into regional prosperity and stability, but also create new growth points for regional development. The opinion piece are saying that, overall this is going to boost growth in the region. Elsewhere, we're talking about the Shanghai Securities News, talking something about markets too. Yeah, they're chiming in on the rally. And this is a conversation we had earlier on with Kindrila, which we'll hear from in just a moment. But certainly when you talk about how things have improved, so they're going by the number of active equity funds, over 2,000 of which have actually achieved positive returns. Out of those, 46 actually saw their net value increase by over 20% this year. Now, separately, you have the Securities Daily talking about how officials are working to, and this is another story, expand the employment opportunities for college graduates. You have a recent survey that actually found the most sought-after industries include tech, scientific research, and the chip sector. China estimates almost 12 million students will graduate from universities this year, and officials are also aiming to create around the same number of jobs in urban areas. And we talked about this earlier on, right, with Cameron. He said there's a skills mismatch that's taken. People are choosing to take on further studies instead of hitting the job market. So and you've got new growth areas that we don't even know is going to create some more disruptions in the labor market as well. I thought it was an interesting point what Kindra talked about, right? The positioning that we're seeing in this market. And certainly that is something that you're seeing is that they're less bearish, these long-only funds. But the mutual funds that they talk to say they might hold out of really coming back to this market, maybe until the election. They need to wait for elections, albeit, of course, still extremely light on positioning right now. So that's it from us here, the Monday edition of the China Show. Why not leave you with a look at markets which are on better footing? This time, this is Bloomberg.